traders, welcome out to your market roundup for January 24th. Corey here with you. So let's talk about markets. We're seeing that push up to the downtrend line and actually through the downtrend line. I've been expecting that for the past few weeks. We kind of talked about that should create max pain in the markets. Today was a pause after yesterday's breaking of that trend line. You can see the Dow up slightly, S&P down slightly, kind of markets waiting for some earnings news, and the news came out after the bell. Microsoft is up sharply after the close. That should follow with kind of furthering this breakout. I'll talk about my thoughts, but I think mega cap tech is kind of the last domino. That should be the last group. It really is the weight. It weighed down the markets and continued to underperform Apple, Google, Amazon. They were all underperforming, kind of weighing down the markets. They should be that last piece of this rally, the finishing move here to the upside. Gold, slightly higher, oil down pretty sharply at down 1.9% on the day. So as we look at the advanced decline line, about half and half. Again, it was a quiet day. 75% of stocks are above the 50-day moving average. We are in uptrends in the shorter term. Those uptrends are likely to fail ultimately, but we're not there yet. On the daily news, there was a weird glitch this morning, and if you were around during the open, you saw this. A lot of New York Stock Exchange stocks were immediately halted, and now their charts look really wacky and funky. You'll pull up a few charts, and it'll look like the stock was either up or down big or both today. And it just was a glitch. They're probably breaking all those trades, if any trades executed. A trade break means it was just kind of an erroneous thing, and none of those trades were accurate, real, and they'll break those apart and not make them last. So a little bit of a technical glitch there. Secondly, the DOJ filed their second antitrust against Google. Now that sounds really bad, antitrust and all these sorts of things. Interestingly enough, if they caused Google to break up and to spin off multiple businesses, and YouTube went this way and web search went this way and so on, it would probably cause the stock to skyrocket on that news. So it's one of those things where, yeah, the news seems bad, but actually a breakup, a spin-off, and so on in the shorter term would probably be quite bullish for the stock. So let's take a look at the S&P. I've been operating on the thesis that we were going to rally from these levels, and that's transpiring. I don't think it's done. Again, my thesis has been playing out, and what I think happens from here is the elevated move, kind of the finishing touch here should be kind of an extreme rally, a sharp rally with a big bullish candle on the end, kind of punctuate the end of this thing, put an exclamation point on the end of it, right? And that would be kind of an exhaustion signal. Remember, we've been operating off of, this is my own personal thesis, that we've been in this 5-wave downtrend. This has been the bear market, that people got too pessimistic, and now we're in the ABC style correction. And why do I say people got pessimistic? Well, if you look at put to call ratio, it hit over new all-time highs, well over anything we've seen in the past 20 years. And we've been through COVID, we've been through the global financial crisis, we've been through the tech bubble, and the put to call ratio hit new all-time highs late last year. That speaks to enormous amounts of pessimism. Max pain as the market's pushing higher and causing all those puts, all that insurance to expire worthless. In addition, at the very end of last year, we saw record quantity of equity closures by individuals, meaning the general public was panicking for the exit. Again, we've lived through COVID, we've lived through the global financial crisis, and they're panicking. There was just so much pessimism that it really caused me to reassess down here where I thought the markets were going to go, because I got bearish like most everyone else up here against this trend line, and I thought, okay, we could resume, and initially we did. I mean, we fell sharply, and that worked out, and I flipped the script there. I really thought, hey, this thing's not done, and you kind of know it when you see it. I can't predict what I'm going to think a few weeks from now, but I do expect that I can put the pieces together and have a pretty good thesis to work off of and at least paint a picture of what I expect. And if it's not following, then I know, okay, I need to trade a little bit more carefully. I need to focus on what is working and kind of reassess my own personal analysis, keep losses small, and so on. But man, when things are working like this, you push the gas and you keep pushing to the upside. So let's take a look at the NASDAQ, and it's very similar type of price pattern. We've now broken above the trend line, and interestingly enough, we are getting tech mega cap stocks are actually outperforming about 2 to 1 over the S&P so far in 2023. It's that final domino, that final piece of the rally. Microsoft, it doesn't have to stay up like it is, but so far after hours it was up 3 or 4%. That should help the Qs, that should help mega cap tech and be good for that final move, that final push higher before we see that exhaustion top. And oh, by the way, I should make mention that once we feel confident that we've hit that exhaustion top, I do think all hell has the potential to break loose. I would be quite bearish on the markets from there, not only retracing and taking out those lows, but making new lows later on this year. So I don't think we're out of the woods by any means, but you trade the market in front of you. And as I've seen it, I felt strongly, confidently that we would rally, that we would see this move. Now, so far this week, some underperformance over here in oil and gas related assets and the materials. So, as the market was breaking out, commodities, which have held up really well, started to lag. And so I took off some of my positioning in those groups. In fact, I took off a stock yesterday in the oil space that this morning was down like 4% right out of the gate. So I was quite happy that I had taken that off yesterday, spotting some of that underperformance in commodities as the markets were breaking out. Now, let's assess where the markets are, where we go. I don't know. I mean, this exhaustion rally could happen immediately. Like we could start to really spike and surge and see the exhaustion right away. We could chop around here for a time and then come and see it in a couple of weeks. I don't know, but that would be the next big driver for me to make wholesale change, big shifting changes where I close out a wide variety of bullish positions and add on a bunch of bearish positions. I don't know how soon it's going to happen. It could come sooner rather than later, but we should be still seeing a bit more upside. So let's look at a few different names here on the bullish and bearish list, and I'm going back to some favorites. These are some that I didn't have on the past couple of weeks, but here's Berkshire. And you've heard me talk about this, that this is ultimately the pattern that I think is playing out in Berkshire. And I think we're going back up here towards that 360 level. And I've talked about this in weeks past, and so my thought is you buy these dips, right? Any deeper correction, you buy it. Here was a recent one. I think we're going up through 320 and such. I would still be a buyer of this. This is the B shares, BRK-B. I would be looking at this for more upside overall. Whether you call this an ascending triangle that it's forming right now or what have you, it looks, again, like it's still working its way higher in kind of this rounding out pattern. Back up there towards 360 on a longer term scale. Did I mention that charts look pretty wacky? Some of these charts just had that glitch on the New York Stock Exchange. So all of this is not realistic, okay? It didn't spike up to near 23 and then all the way back down. It was a technical glitch, but the actual price pattern was this bullish candle here. We did gap down a little. We did rebound throughout the day. And I think, again, this is kind of the type of idea that I look for. I look for bigger pullback followed by a shallower pullback, and I like to buy that for the next run. Ascending triangle, cup in hand, whatever you want to call it, I like to buy in those dips, and we should continue to outperform here for a couple more weeks. AT&T and Berkshire Hathaway are both pretty darn boring. They're low beta. They are not high flyers. There is not a lot of uh, momentum to be anticipated. This is a stock we had on last week, and we said, look, it just broke out. Try to buy the next pullback, and I love that it kind of dipped into. I always talk about that support to me is not like this rigid, strong level. It's a trampoline, right? You push into it, and it springs you up off. XBI looks great. Hopefully, you bought the pullback, but even if you didn't, keep thinking about this group as a potential play. Healthcare is having a rough start to the year. Biotech, though, is a little different, right? Pharmaceuticals trade differently than biotech. This is the biotech space, which is holding up nicely. On the bearish side, so we've talked about, I mean, I don't know how often I've had AMC and GameStop in the bearish list in the past couple of months, but basically, I make note that every time I see a big, I'll call it kind of a mega spike, I want to get short. And so here's a big spike up, and here's a big spike up, and here's a big spike up. And here we're right now on kind of a big spike up. And all of these would have worked towards profitability, right? Assuming you didn't have a super short-term trade. I would go out a month, 2 months, something like that. Now, at some point, these will fail. Maybe this is the spot where, we have that rip your face off rally to finish this move, and maybe AMC and GameStop and these names participate. Maybe, but they're trading this way because they should trade this way, because fundamentally their businesses are flawed, and I don't think that there's a huge recovery in their futures from a business standpoint. And so these are short covering rallies, and when you feel like they've kind of inflicted max pain to the upside, or give a little exhaustion signal like that candle, or high wave shadow, that's kind of the finishing line, right? That's the finishing line for the rally, and I think that's what that was a few days ago. Look at GameStop, same thing, same concept. We highlighted it a few different times back here in the past. We've had a recent rally. I think yesterday was kind of the exhaustion high here, and we should start to head back towards and through 15. So it's not going to be a straight line. These are volatile. They'll be choppy all over the place. Maybe this goes up a little first, but I ultimately think we're on a path back below $15 per share. So those are high beta. Those are aggressive. You would trade small position size. I don't even mind, out of the money spreads where you're buying a put spread well down here, where you're risking one to make three or four, a really good risk to reward ratio. They certainly have the potential to pay off. And then last but not least, Palo Alto Networks, nice huge bounce back up, but I think in this case you can play it for a short-term drop. And I'm only talking about a couple of dollars. This one I'm not so much trading back to the low end of the range. What I think will transpire here in Palo Alto is a pushback towards kind of the middle of this range. Call it the mid to low 140s. So this one, I think you can just kind of trade it, maybe even a butterfly, a targeted butterfly below in the short term. Kind of speculate on a 10 to, well, let's call it $8 to $10 move to the downside, something like that. It's kind of what I'm envisioning here in the short term. On the rest of the week, so we've had this viewpoint that we're in, well, I should speak for myself. I've had a viewpoint that we're going to push above the downtrend line and finish out this ABC correction. That still is my viewpoint. We're still in the midst of that. Advanced GDP on Thursday. Earnings reports, we've got American Express, Boeing, Clorox, no, CL, I think that's Colgate actually. Chevron, MasterCard, AT&T, which we highlighted, so be aware of that. Tesla, Visa. If you're trading AT&T, you would end up trading it through earnings. They report a little bit later on this week. Hope you enjoyed the market roundup. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.